Hello, hello. For new participants, we are just waiting a couple of minutes more. Still people joining us. Just one more minute. Thank you for your patience. Okay. I think it's time to start. Welcome, everyone. Thank you for joining us today. And yeah, I so many familiar names here. Hello. As you know, over the past decade, the financial sector has become deeply reliant on digital technologies. As a result, it's become equally important for financial institutions to safeguard themselves from the risk associated with these technologies, such as cyber threats and ICT-related disruptions. And this brings us to today's discussion about DORA, the Digital Operational Resilience Act. It's a pivotal regulation designed to strengthen the digital resilience of financial entities across the EU, ensuring that institutions can withstand, respond to, and recover from digital disruptions. Today, we'll explore DORA in detail and understand its implication for the financial sector. Okay, so let's go over the agenda for today first. After the introduction, we'll start by understanding what DORA is, its objectives and scope, followed by the key requirements that financial entities need to comply with. We will also discuss the challenges of compliance and how to overcome them, finishing with some actionable strategies to help you on your journey towards DORA compliance. And before we dive into today's topic, I'd like to briefly introduce myself. My name is Filiz Demirci, and I am the founder of TechnoServe IT Consulting. I've been working in cybersecurity and GRC, governance, risk, and compliance for over 2 decades. And during that time, I've had the privilege of helping numerous organizations strengthen their digital resilience, safeguard sensitive data, and navigate the complexities of compliance with evolving regulations. As a computer science engineer, my journey began with a focus on secure infrastructure architecture. And over the years, I've extended my expertise to encompass compliance and data protection, which have become increasingly vital as technology continues to evolve. And most recently, I venture into the world of AI governance and strategy, a particularly exciting field as AI transforms the way we live and work. I'm really excited about this area. And at TechnoServe, we are dedicated to providing tailored solutions that help our clients tackle these challenges. As you can see on the slide, we offer variety of services in cybersecurity, compliance, and AI strategy. And today's webinar has been made possible through the support of my valued partner, the CFE certification. CFE Cert is accredited by both the UK Accreditation Service, UCAS, and the International Accreditation Service, IAS. And CFE Cert of countries offering a wide range of comprehensive services and specialize in providing a variety of vital services to organizations across various sectors. And their offering encompass gap analysis, training, audit, certification services in those areas. And now that's enough promotion. Just remember, if you need assistance, feel free to reach out and we are always here to help. And with that, let's move on to the main focus of today, ensuring your organization is fully prepared and comply with DORA. Okay, let's first discuss why digital resilience is so important in financial services. Financial services are truly at the core of global economy. The complexity and interconnectedness of these systems mean that any breakdown can have far-reaching consequences. A disruption in any part of the financial services chain can lead to significant financial losses, data breaches, and in extreme cases, market instability. This disruption, whether it's a result of a cyber attack, a technical failure, or even a natural disaster, I'm sure many of you may remember the CrowdStrike incident that happened in the summer. A widespread CrowdStrike-related IT outage impacted multiple organizations, including financial services, and causing significant operational disruptions. This incident was attributed to a misconfigured update from CrowdStrike, which underscores the importance of resilient ICT systems, information and communication technology systems, and strong incident response mechanism. And speaking of trust, customer expectations today are higher than ever, and consumers expect their financial services to be available 24/7, secure, reliable, and seamless. Any downtime or breach can seriously erode the confidence, driving customers toward more secure and reliable alternatives. And additionally, the global average cost of ransomware attack in 2023 was 4.54 million USD, highlighting the increasing financial burden on organizations from cyber attacks. And this is where digital resilience becomes critical. It's not just about protecting against cyber attacks or disruptions, but ensuring that systems can withstand, recover from, and continue operating during any kind of disruption, whether it's a human error, a natural disaster, or a malicious cyber attacks. Financial institutions need to have the resilience to respond quickly and recover fully, ensuring continuity and data protection. Okay, now with this context in mind, let's take a closer look at DORA and how it specifically addresses these growing concerns within the financial services sector. So, what is DORA and why was it introduced? DORA is part of the European Union's digital financial strategy launched in 2020. And its goal is quite straightforward: to ensure that all financial entities within the EU including banks, insurers, investment firms, and third-party service providers, can maintain operational resilience in the face of any type of digital disruption. And before DORA, financial entities across the EU were governed by a fragmented patchwork of national rules and guidelines regarding operational resilience. This lack of uniformity created vulnerabilities. Financial firms faced different standards depending on their country of operations, and many were struggling to keep pace with the growing complexities of ICT risks. DORA was introduced to harmonize these rules and provide a clear, consistent framework across the entire EU. And the Act covers more than 22,000 financial entities and ensures that they all adhere to the same operational resilience standards, from banks and insurers to the critical ICT service providers, such as cloud computing firms, data centers. So DORA's reach is quite extensive. And the regulation has one clear focus: to ensure financial firms are prepared to withstand, respond to, and recover from all kinds of ICT-related disruptions, whether it's a cyber attack, a system failure, or even a natural disaster that impacts IT infrastructure. Okay, now let's focus on its core objectives, as we mentioned some part of it already so far. DORA's first and perhaps most crucial objective is harmonization. Before DORA, ICT risk management across the EU was fragmented, and different countries have their own standards, making it challenging for financial institutions to operate across borders. And DORA unifies these regulations, creating a single, consistent framework that applies to all financial entities within the EU. This ensures a level playing field where everyone adheres to the same standard for ICT risk management. And the second key objective is obviously operational resilience. DORA ensures that financial firms are capable of withstanding, recovering from, and continuing to operate during ICT-related disruptions. And the third one is financial stability. By addressing operational risk across the entire financial sector, DORA protects the broader financial system from disruption. ICT-related failures can have ripple effects, potentially impacting customers, investors, and even the overall economy. DORA ensures that these risks are effectively managed, mitigating their impact on financial stability. And finally, risk management is a cornerstone of DORA. It mandates that firms not only have solid ICT risk governance in place, but that they continuously assess and improve their ICT resilience. This means ongoing monitoring, regular testing, and building a culture of proactive risk management, not just reactive responses. Now let's look at the scope of DORA, which is outlined in Article 2 of the regulation. And DORA applies to a broad range of financial entities, including both traditional financial institutions and ICT third-party service providers. You see the whole list from the DORA, and from A to T, we can call them financial entities. DORA defined them as financial entities. And the last one is ICT third-party service providers. And those lists includes your familiar players in the financial services sector, such as credit institutions. These are typical banks, payment institutions, companies that provide payment services to customers, investment firms, organizations involved in asset management and financial trading services, Insurance and reinsurance undertakings include traditional insurance providers and intermediaries. And also, it's important to note that DORA extends beyond just these core institutions. It's also extend to crypto asset service providers, reflecting the growing significance of digital currencies in the financial landscape, or central counterparties, which act as intermediaries in financial trades to ensure risk management. And ICT third-party providers. One of the most significant aspects of DORA is its inclusion of ICT third-party service providers. And these are companies that offer critical IT services to financial institutions, such as cloud service provider, digital and data service providers, data analytics service providers, data centers and hosting providers, and software vendors, and more. By including these service providers, DORA ensures that not only the financial entities themselves are resilient, but also the digital infrastructure that supports them. For example, let's say a major financial institution rely on a cloud provider to store customer data. And under DORA, that cloud provider must also meet operational resilience standards, ensuring that any disruption in their services do not impact the financial institution's operations. And there are also some entities that fall outside the scope of DORA. For instance, companies offering non-financial services, small fintech startups that do not meet certain thresholds, or technology companies that do not provide ICT services directly to the financial sector may not be subject to the same stringent requirements. And DORA also refers to micro enterprises, and due to their size, they often have fewer regulation requirements. A micro enterprise is a small business with fewer than 10 employees and annual turnover or balance sheet total of less than 2 million euros. The broad scope of DORA means that its operational resilience requirement impact not just the financial entities we typically think of, but also the whole digital ecosystem they rely on. And this makes DORA a powerful tool in ensuring end-to-end resilience in financial sector. Entities that do not comply with DORA's requirements may face financial penalties as well. The amount of the fine will vary according to the national laws of EU member states and the seriousness of the non-compliance. Generally, fines are assessed based on factors such as the company's size, revenue, or the degree of damage caused by the violation. Firms that violate the Act could face fines up to 2% of their total annual worldwide turnover, or a maximum of 1 million euros in the case of an individual. And similarly, critical third-party ICT service providers may incur fines of up to 5 million euros, and individuals could face fines as high as 500,000 euros. And additionally, violations might result in audits or even the suspension of a company's operation. So, what exactly does DORA require from financial entities? Let's break this down into the 5 key pillars. And understanding these pillars is crucial for any financial entity aiming to achieve compliance and enhance its digital operational resilience. The first requirement under DORA is the establishment of a comprehensive ICT risk management framework. This framework should cover the entire life cycle of ICT systems, from planning to procurement and deployment to maintenance and decommissioning. It's about having a proactive approach to identify risks and addressing them before they can lead to any major incidents. And by implementing effective ICT risk management, organization can significantly lower the chances of unexpected cyber attacks. This is achieved through detailed risk assessment aimed at both preventing and detecting cyber threats early on. And this aspect of the framework places ultimate responsibility for applying appropriate measures and controls squarely on each firm's management body, ensuring that operational and security risks are effectively managed. And additionally, it requires a well-documented ICT risk management framework. To meet these compliance standards, businesses must identify their impact tolerance, recognize risk associations, and pinpoint their critical functions. DORA also requires financial institutions to report major ICT-related incidents to competent authorities within 4 hours. And this is a very strict timeline. So firms need an efficient system in place to detect, classify, and report incidents rapidly. As part of this requirement, organizations must submit comprehensive reports detailing all ICT-related incidents or threats. And these reports should provide information on the number of users affected, the amount of data compromised, the severity of the incident's impact on ICT systems, its geographical reach, the criticality of the affected services, and the economic ramification. So the reports should include all those information. And by submitting detailed reports, organizations enable more effective monitoring and management of incidents, allowing both themselves and regulators to gain valuable insights for future recovery effort. And DORA also mandates regular resilience testing of critical ICT systems. This includes threat-led penetration testing, which simulates real-world cyber attacks to identify vulnerabilities in the system. And the goal is to ensure that systems can withstand actual threats and recover quickly. I just remember while I was working at a cybersecurity company, one of my team was a pen testing team. And we had requests for complete black box testing from some clients. We weren't called it thread-led penetration testing at that time. And it was quite fun, actually. We were trying to get into their building without access fob or hack someone from the inside using social engineering because it was completely black box testing. We don't have any information from inside. And the results were pretty amazing in terms of how easily we could access them, even with how much trust organizations have in their systems and their people. So this is really an important part of providing operational resilience. And financial entities must conduct proportional threat-based penetration testing every 3 years. And these evaluations or assessments should be carried out by independent testers with regulatory sanction to ensure reliable results. However, threat-led penetration testing, TLPT, we call that after this, and is not mandatory for all financial entities in DORA scope. Only those that are considered large, systemic, and ICT major or play a critical role in financial markets are required to conduct such advanced testing. Other financial entities with lower levels of cybersecurity preparedness may follow less stringent testing requirements. But the important part, testing should include a wide variety of tools and actions, ranging from the assessment of basic requirements such as vulnerability assessment and scans, or open source analysis, and network security assessment, gap analysis, physical security reviews, or scanning software solutions, or scenario-based tests, compatibility testing, performance testing, or end-to-end testing, and many more. And all financial entities should regularly test their ICT systems. Business continuity plans and staff having ICT-related responsibilities with regard to the effectiveness of their preventive detection, response, and recovery capabilities to uncover the address potential ICT vulnerabilities. And another key challenge is that DORA addresses is third-party risk management. DORA places significant emphasis on managing risk associated with third-party ICT service providers. This means that financial entities must conduct detailed due diligence before engaging with third parties and ensure that contracts include provision for compliance with DORA. Ongoing monitoring of these providers is also required to ensure that these providers continue to meet the required standards. And additionally, financial entities should have exit strategies in place for critical ICT providers in case they are unable to meet the resilience standards. And these strategies ensure that the firm can transition to alternative solutions without disrupting its operations. And lastly, DORA encourages voluntary information sharing on cyber threats. While this is not a mandatory requirement, it's highly encouraged as part of a broader effort to strengthen the collective resilience of the financial sector. By sharing information on emerging threats and vulnerabilities with other financial entities and firms, can collectively improve their defense and reduce the risk of widespread cyber attacks. This also fosters a sense of collaboration within the industry and helping everyone stay ahead of evolving threats. For example, if one financial firm identifies a new phishing attack targeting its employees, sharing this information with other organizations can help them strengthen their own defenses against the same threat. And we can say that there's another pillar that covers them all as a roof: governance. And governance ensures that the management body of financial entities, is responsible for overseeing and implementing comprehensive ICT risk management frameworks. This includes assigning ultimate responsibility for ICT risks, establishing high standards for data confidentiality and availability, approving and reviewing business continuity policies, managing third-party service providers, and ensuring regular training for staff. And effective governance acts as the overarching structure that ensure all pillars of resilience are integrated and properly enforced, supporting the organization's overall digital operational resilience. And these requirements are designed to ensure that financial entities are proactive rather than reactive when it comes to operational resilience. And by managing risks, testing systems, ensuring compliance from third parties, and sharing critical information, financial entities can significantly reduce the likelihood of major operational disruptions. And with these key requirements in mind, the next logical question is, what are the challenges that financial entities face when trying to comply with DORA, and how can they overcome these obstacles? Let's explore that in the next slides. One of the most pressing challenges is DORA's requirement for reporting major ICT-related incidents within just 4 hours of detection. This is a very tight window, especially considering the time it takes to detect, classify, and analyze an incident. And meeting this deadline requires not just robust incident detection systems, but also seamless coordination across all departments to ensure that the correct information is reported to the appropriate authorities quickly. For many firms, setting up efficient systems that allow them to meet these deadlines is a major challenge. For example, imagine a payment service provider facing with ransomware attack that disrupts customer transaction. And in this case, they need to quickly assess the scope of the incident and report it to their competent authority within that 4-hour window. And something that's not easy without advanced detection and communication processes in place. And another challenge lies in managing third-party risks. Many financial entities rely heavily on third-party ICT providers, such as cloud services or outsourced data centers. And DORA requires these third-party providers to meet the same operational resilience standards as the financial entities. And ensuring compliance across external partners, especially when dealing with multiple vendors, is both complex and resource intensive. And harmonizing DORA with other regulatory frameworks is another obstacle. Many financial institutions are already working to comply with regulations such as ISO 27001 and industry-specific requirements like FCA guidelines. Adapting existing frameworks to align with DORA while ensuring consistent risk management processes across multiple standards can be highly complex, especially for firms that operate across multiple jurisdictions. And this can create overlaps and additional workload for compliance team, which need to ensure all regulatory boxes are ticked and well implemented. And this may require someone or some team with experience in all those frameworks, which is quite rare to find. And another big hurdle is the complexity of resilience testing. As we mentioned earlier, DORA mandates regular TLPT, threat-led penetration testing, particularly for critical systems. This requires financial entities to simulate real-world cyber attacks to test the resilience of their systems. While many institutions already conduct some form of penetration testing, TLPT involves a higher level of sophistication, coordination with external experts, and significant resources. Even defining the TLPT scope may require a good knowledge of cybersecurity, as well as extensive planning and investment elements. And finally, many financial entities, especially smaller firms and also ICT service providers, struggle with resource limitations. Implementing the comprehensive ICT risk management framework, conducting resilient testing, and managing third-party risk all demand substantial expertise, staff, and technology. Some firms may lack the internal capacity to meet these demands fully, and this can make it difficult to fully comply with the regulation and leaving those firms vulnerable to potential penalties or operational disruptions. So these are various challenges, but there are many more challenges here. We also mentioned some common challenges to financial entities and ICT service providers complying with DORA. So please feel free to write in a chat box if you have another one we don't mention here, or if you would like to add some additional information here. And so how can we overcome those challenges? I know it's not easy to overcome to all challenges, but there are some strategies or steps we can apply as an organization or financial entities. The first step or first strategy to develop a comprehensive risk management framework. So you should create a structured ICT risk identification, classification, and management framework that covers the entire life cycle of ICT systems, from procurement to decommissioning, or extend your current structure to cover all those areas and ensure risks are continuously identified, assessed, and mitigated. And you may also implement tools and continuously monitor system vulnerabilities and provide real-time risk assessment for all critical ICT systems. And ensure your organization has clear and actionable risk prevention, response, and recovery plans in place. These plans should specify the steps your teams need to take before, during, and after the incident to minimize damage and restore services. For example, for a firm facing a ransomware attack, the response plan should outline immediate steps to isolate affected systems, mitigate the spread of malware, and begin recovery, all while complying with DORA's stringent reporting requirements in 4 hours. And developing a robust incident management framework is another crucial step. To be able to comply with the DORA, you have to build a comprehensive incident management framework. It's totally vital. And this framework should define how incidents are detected, classified, responded to, and reported. Also, you may invest in automated detection and monitoring systems that allow for continuous surveillance of ICT environments, if you could. Artificial intelligence technologies in cybersecurity are developing at a dizzying pace, and tools driven by AI can detect anomalies in real time, which will help with faster identification of potential risks. And many companies, especially in the financial sector, have CM or outsource SOC services, security operations center services, to detect suspicious activities such as unusual login attempts or spike in network traffic. But as we all know, it is not easy to detect a cyber attack. And there are many problems in those areas, such as dealing with a huge amount of false positive. An AI-powered tool can definitely help better now and in the future. And also you could use an automated reporting systems that logs critical data and alerts your team within minutes of an ICT disruptions. And another important step or strategy is establishing internal and external notification channels. Both internal stakeholders and external regulatory authorities must be notified promptly during incidents. And setting up clear notification channels ensures effective communication. And DORA requires firms, financial entities to clearly define what constitutes a major ICT-related incident. Update your incident classification methodologies to ensure that all relevant incidents are categorized correctly, and those with significant business impacts are prioritized for immediate actions. This also helps ensure that incidents are handled with the right level of urgency. Ongoing training also helps that employees can effectively respond to incidents. Regular exercises and simulations will prepare teams to handle real-life crises efficiently. The next one is conducting threat-led penetration testing. I think the requirements for TLPT are clear. DORA mandates regular TLPT, particularly for critical ICT systems. And first, you should focus on the basics, such as conducting regular vulnerability assessment and penetration tests. If your organization has a high level of security maturity, you need to perform TLPT based on the requirements. But additionally, it is beneficial to have comprehensive assessment carried out by cybersecurity experts. So if possible, I highly recommend doing so. And the next one is managing third-party risks. To be able to do that in more effective way, Define the acceptance criteria, review period, and exit strategies in your policy for third-party ICT service providers. And create a comprehensive register of all third-party ICT service providers, documenting their roles, compliance status, criticality level, and services provided. Define relevant risks. And this uh, this register and this whole process ensures clear oversight of third-party systems and any associated risks. For example, a register of your third-party ICT service providers, including cloud service providers and software vendors, and with details on their security measures and DORA compliance, should be maintained and updated regularly. You also need to record their audits and assessment results as well. And when conducting ICT resilience testing, third-party systems must be included. And this provides that all external dependencies on ICT providers are evaluated under the same scrutiny as internal systems. Additionally, many financial entities already follow frameworks such as ISO 27001, SOC 2, or many more. Integrating DORA's requirements with these existing frameworks can reduce redundancy and streamline compliance processes. For example, a firm that has a ISO 27001 certification should already have comprehensive risk management processes in place, including ICT risk and many other processes like supplier management, third-party risk, etc. So, ensure a unified framework covers both regulations and avoid creating additional processes and documents if not necessary. Otherwise, this may increase the required effort, resources, and also may cause oversights and errors. And the last but not least, training. Training. I know as employees of various companies, we must complete numerous training programs, including those on information security, GDPR, health and safety, and more. But we need to really learn about cyber threats, information security, and data protection to safeguard both our personal and organizational data. And this knowledge isn't just important for the companies we work for, it's central to our daily lives. Now, let's take a moment to compare DORA with similar regulatory frameworks in the UK. Although DORA is an EU regulations, many of its key requirements align closely with the UK's Operational Resilience Framework, which was established by the Bank of England, the Prudential Regulation Authority, and the Financial Conduct Authority. Both DORA and the UK's framework emphasize the need for financial entities to be able to withstand, respond to, and recover from ICT disruptions. They both mandate resilience testing, third-party management, and a strong focus on incident management. However, there are also some important differences between DORA and the UK's Operational Resilience Framework. One of the key differences is DORA's prescriptive incident reporting requirement. Under DORA, financial institutions must report any major ICT-related incidents to competent authorities within 4 hours. And this is very specific, very stringent timeline. However, the UK's framework allows for more flexibility regarding how and when incidents must be reported. And another major difference is DORA's focus on third-party risk management. While the UK's framework does encourage financial firms to manage the risk posed by third-party service providers, DORA takes this a step further by mandating that firms continues to monitor these providers to ensure they comply with the same operational resilience standards. And this means that firms need to have sound, robust contracts, due diligence, and monitoring systems in place for all third-party ICT providers. So, what does this mean for UK firms? Even though the UK has left the EU, Brexit doesn't exempt UK financial institutions from DORA's requirements. Any financial institution that provides services to EU-based clients or operates in the EU will still need to comply with DORA. It's similar to the GDPR, if you're familiar with that one. And this means that UK firms must be prepared to align with both the FCA operational resilience requirements and DORA's more prescriptive standards as well. So in practical terms, this creates an additional layer of compliance for UK firms, and they need to ensure they are meeting both standards. Okay, let's focus on the practical steps and strategies that financial entities can take to achieve compliance with DORA, and you can apply in your organization. The first and most critical step is to perform a comprehensive gap analysis. And this involves evaluating your current ICT risk management practices and comparing them to DORA's requirements. The gap analysis will help identify where your organizations fall short and what specific actions are needed to close those gaps. And this step is crucial because DORA is a wide-ranging regulation that touches many operational areas from incident reporting to third-party management. And it ensures that you have a tailored strategy based on your current operational state. And next, you should implement or extend your current risk management framework to monitor ICT risks. And you may implement automated risk management tools as well. Given DORA's complexity and scale, manual processes can quickly become inefficient and error-prone. But it is still possible to manage the risk management processes manually depending on the size of the firms. And another key requirement of DORA is resilience testing, as we know so far. And to meet these requirements, firms should develop a structured resilience testing program, which includes penetration testing and threat-led penetration testing, if necessary, for critical systems. And this testing program include business continuity policy and plans, and those should be regular and ongoing process, not a one-time effort. So regular testing helps you stay ahead of emerging risks. And in addition to internal resilience, DORA places a strong emphasis on third-party risk management. Many financial institutions rely on external service provider for their ICT needs. And under DORA, these providers must meet the same resilience standards. And the best way to do that, this is to implement strong due diligence procedures and contracts with your providers that clearly outline their obligations under DORA. And again, regular monitoring and audits of these providers are also essential to make sure they remain compliant over time. And another key strategy is to create a cross-functional DORA compliance team. DORA affects multiple parts of organization, from IT and risk management to legal and compliance. By bringing together representatives from these departments, you can ensure that compliance efforts are coordinated across the entire organization. And this team should be responsible for overseeing the implementation of DORA's requirement, conducting internal audits, and liaising with external auditors and regulators. And again, training and education. Those are crucial. And DORA compliance is not a one-time project. It requires ongoing efforts, like many other information security standards. And staff across all levels of your organization must be kept up to date on DORA's requirements as well as the best practices in ICT risk management. And this is especially important for those involved in incident detection and response, where quick and informed decision making is critical. And finally, if your organization lacks the internal resources or expertise to carry out certain elements of DORA compliance, such as managing ICT risk or third-party risks, or developing compliance roadmap, conducting gap analysis, implementing business continuity and testing programs, it definitely be worthwhile to engage with external experts. And at TechnoServe IT and CF certification, we can provide guidance and support you to ensure that your organizations meet DORA's stringent requirements. And by following these actionable strategies, financial entities can not only ensure compliance with DORA, but also strengthen their operational resilience. And in conclusion, they represent a significant shift in how financial institutions across the EU and beyond must manage their ICT risks. Achieving compliance will require a coordinated effort across your organization, but the result will be stronger, more resilient financial system. It's about more than just meeting regulatory requirements. It's about creating an organization that is better prepared for the challenges of today's digital landscape. And now, I'd like to open the floor for any questions you might have. And this is your opportunity to dive deeper into any of the topics we've covered today. And I'm here to help clarify anything that may be unclear or provide further guidance on how your organization can successfully navigate DORA compliance. Let me check chat. Okay. I haven't seen any questions in chat. We are on live on YouTube as well, but I'm not able to see if there's any question there. So I don't know if someone from YouTube have questions. Sorry about that, but you can see my contact details, so you can reach out whenever you want. And lastly, I'd like to mention the CFE Cert online course calendar for November 2024. And the calendar offers a variety of training programs. And I will deliver ISO 42001 Artificial Intelligence Management System Lead Auditor training on week commencing 18th of November. And at TechnoServe IT and CFE Cert, we can provide guidance and support you to ensure that your organizations meet DORA's requirement or any other information security standards. We can help you perform gap analysis, build compliance roadmaps, and implement effective resilience testing programs. And if you are ready to begin your compliance journey or need further support or training or certification, please feel free to reach out. And before leaving, I would like to share or refer to participation certification. CFE Cert will provide you. Can you see the link on chat? Please someone write yes or no. Can you see the certification? Okay, thank you. And yeah, we have some nice feedback. Thank you so much. And thank you for your time today. And I look forward to connecting with you all. Have a lovely evening or have a lovely have a lovely one wherever you are joining.